Hello, hello. Black hole sun. That's what came up in today's workout. That's what the Bulls have today. Right? All right. Anyways, today is May 4th. We had the FOMC meeting yesterday. And what did the Fed do? They did what the market expected them to do. They raised interest rates by a quarter basis points. The market did anticipate, though, that the Fed is going to stop raising rates in the next meeting after this one. It still expects that. But the Fed actually said that they're going to do whatever it takes according to what they're going to see the economic indicators are going to show them. So they didn't give the markets what the markets really wanted. They didn't say we're going to pause. With everything that's going on in the banking, the regional banking industry, they still didn't do it. And the regional banking industry and the ETF and all these banks I'm watching, some of them are getting walloped, right? I mean, we've had 3 bank failures so far, and it seems like WAL almost collapsed today as well, and PACW. So let's look at these graphs for a minute. Let's see what's going on here. In the last graph, what I showed you was that everything was on the high end of the resistance bands, right? So overall, the SPY, if we look at it, overall, obviously we have this, it's an uptrend if we're looking at the last few years, but if we're looking at the last couple of months, right, since more than a couple of months, since mid 21, right here, we pretty much have a flag. You could say that's a bull flag, but whatever, it's a flag. We are on the high end of this band line, which I've been pointing out to you since October, right? We were on the high end of it. We almost are. The NASDAQ one was really, really at the high end. And the Dow was at the high end, a little bit above it, actually, okay, before the Fed meeting. So that's what we're looking at in the long term. Long term, we're looking upwards. Medium term, we're in the downtrend, which could roll over and fall completely. With all this crazy economic uncertainty and crazy thing that's going on, most of the analysts believe that the bulls have a case. This market's going up, and they're buying the stocks. People like me that sit at home were like, wait a minute, but what about all this recession talk? What about the inflation talk? What about all the facts these banks are, having something withdrawals of that no bank could sustain, billions of dollars, $40 billion within 48 hours or 24 hours, 36 hours. It's stuff you guys haven't seen before. How are you dealing with all that? With the fact that everything is so expensive at the supermarket, lots of jobs out there. The Fed wants to actually, for some of us to lose our jobs. That's its goal. It needs to, for the overall benefit of the greater good. So let's see actual trades. Let's have some fun. So yesterday, before the Fed meeting, the SPY was at around 412. This is where we were. It's a 5-minute graph. This is where we were. I showed you guys that we went all the way up from 404, all the way, we went all the way up from 404, last videos that I showed you, to 417. The Dow went up like 10 points, the SPY 13. Then we fell down the 10 points the following day, and then we went back up. During that day of the Fed meeting, we were right around here. So the Fed, we were 412, and the Fed said it was going to, raise rates by another quarter base points. So the market went up, went down, went up to 413, down to 411, 413, 410, 412, 410. It goes up and down. Now, that's a time, we are in a time of uncertainty and a lot of volatility. When there's uncertainty, there's volatility. What I do is, first of all, I go with what I believe. If I'm not rich enough to short the stock itself, I told you options, so you could take options. I'm a believer that things are going down, so I will take, let's say I don't want to hold the SPYs, so I'll take puts long term, 1 quarter out, 2 quarters out, whatever it is. But what do I do when there is a time where I know there's going to be volatility now in the next 24, 48 hours or a week? What I could do is I can actually buy a straddle, which is buying a call and buying a put. So let's say I bought the straddle at 412. Okay, right here I bought a straddle, a call, and put at 412. I paid for each one of these calls and puts $250, give or take. I expect the market to move more than 2.5 points, which is $250 that I paid. Each point on 100 shares, a contract is 100 shares. Each point is $100, right? The stock market moved 13 points. The SPY moved before the Fed announced the rate decision. So I believe there's going to be a move either way. 2.5 and 2.5 is 5 points above 5 points. And so I ended up paying $500 for the call, for the straddle, for the call and the put, $250 each. And what happens is I gave myself some time. So it was Wednesday evening. I took the Friday expiration and next week's expiration, right? 2 straddles. And what I ended up with was that the put ended up going up 200% in pre-market. We went down to 405. So I kind of knew where they want to go down to 405. And then we opened up at 407. We went down. I waited till we got to 405, right around here. I didn't wait much. My put was worth $479, almost 200%. And the call that I'm going to take a loss on, if I take a loss on the whole thing, was around $250. So I ended up making pretty much double what I made, what my loss is going to be. I ended up making $479. And even if my call I'll lose the whole thing, it'll be around $250. So when you have a lot of volatility, that's the way. When you expect a lot of volatility, that's the way to play the market. You could do that on a straddle. I would have lost money on the trade if nothing would have happened. If the SPY would have stayed around 412 to 408 to 414, whatever, I would have lost money on the trade because my calls didn't move enough in order for me to be in the money. So once again, I bought a $250 call. I bought a $250 put. I invested $500. As soon as the put was worth $479 in profit, which is a lot of money, I closed it out at a profit. I put in my pocket $479. Even if I lose on the put $250, I'm still profitable. So that's how you play the market when there's volatility. Okay. Let's move on a little bit to the KRE. We're going to move on to the KRE. No. Here we go. There we are. KRE. All right. So we had the KRE right here. I've been talking to you about this for a while now, right? We had the crazy fall, March 14th, went up and down. We had the low of 41.91. We broke it a few times. And then we had that day, which I mentioned, we fell down and we built this bear flag. I see a flag. Everybody sees a flag. That's a flag. We had a bear flag on a downtrend. We know we're going down. We see we're going down. Everything is down. Fundamental news is bad. Technical news is bad. So we want to, we're obviously going short on these positions. So the momentum on the KRE is continuing down. We're going to see how that develops. The way I play it is I don't want to hold these sectors or these stocks because they're so volatile in the news. And I'll show you in a minute how you can lose a lot of money in this stuff. This is how I play it. So I buy it with options, not with stocks. I really, really like to play the stocks, but I'll do it intraday, not for the long term, not for my swing trades. So we're continuing with the downtrend. Nothing is changing on that. Let's go and take a look for a minute at WAL. Okay, we're going to look at WAL. This is, by the way, there is an IPO coming out today, KVUE. It's coming out pretty soon. KVUE. So this is it, KVUE. All right, let's look at WAL. let's see what happened here. Craziness. This is all the fun, the volatility and the excitement. So WAL fell all the way down till about, on the 14th till about $21, went all the way up to, am I looking at the right place? Oh, it's a monthly. Sorry, my bad. Here we go on a daily, went all the way down to 14 bucks. Right, here we are, fell down to 14 bucks. No, not $14. We fell down to $7.50 that day on March 14th, right? Then we pop back up all the way up to whatever. We sold around $33, $32, okay? I actually lost money on those puts when they went up to the following days. They didn't go, they went down to after earnings. They went up to $42. I actually took puts for a month out. I should have taken them out for 2 months. The stock, we had this crash a little bit after my options expired, but when it went up to $44, I took out some more puts, for another quarter out, because I believe in the craziness that I see. Just because I was wrong one time doesn't mean I need to give up my trade. I've done I studied a lot in order to know what's going on, and this is what I see. And here we are with WAL just collapsing. It's one of the stocks that's been talked about. You got to see what's being talked about in the news. They're talking about HBAN, CMA, Zion, FHN, and WAL and PACW. Okay, those are the stocks they've been talking about. And if WAL went to $7, there's a probability to go back down there, right? And what happened today was somebody put out an article somewhere, I don't know, in the New York Times or something like that. Stock fell all the way down to 11 bucks. But look how it happens, okay? Started trading. Obviously, it went down a few days ago, 2 days ago. Pre-market went all the way into 20. I took a little day trade over here. Why not? Very little to risk. If I'm taking a trade right around here, I see it stopping, but, risk is like $1. And we started coming, and then then there was an announcement. Bloomberg said that it's not true. The stock is not collapsing, and here it is trading up again, right? So now we expect a lot of volatility. This is another thing like the SPY. You could actually buy a call and put here. Who knows what's going to happen? This stock was $44 a couple of days ago, $11 in the morning. You could try a straddle if you could find one that's cheap enough. I think they're way too expensive. Just out of curiosity, since we're doing this live, let's look at them, right? So we'll look at the calls and the puts, and just curious to see how much these puts are costing us right now, right? Let's go a week out, because 720. Oh man, that's like $7. You got to make $7 each way. That's crazy. Really, really expensive, these calls and puts. So I wouldn't really trade that. I would day trade this right now. Okay, I would let it settle down, and then obviously be able to trade it, and then see how it closes towards the end of the day, and then make a decision if I want to take a swing trade on it or not for a call or a put or a straddle. But if you are like short, shorting this thing at $11, hoping it's gonna go to $5, you got walloped. Your account probably, got disseminated just now. So you got to really, really be careful how you're trading these things. Intraday, if you're gonna intraday trade it, you got to put tight stop losses, because if it moves a little more than what they're going to halt it for, the percentage that they're going to halt it for, then you're toast. You don't know where this thing is going to open up. 11 to 20, that's like 100%. So be careful on this, on that front. Let's move on. PACW. Let's look at PACW, see what happened here. So PACW on March 14th fell down to $5, flew back all the way up to about 14, settled at around $10, right? Went up to 12, got a resistance, and started collapsing in. So obviously, this is an area that you would take your long or short, right? That's where the stock settled. You want to go with the trend. You want to go short as opposed to going long, unless you're going to hear news that things are getting better. So far, I haven't heard any news in the last 2 weeks that things are getting better at all. Okay, so PACW, this is how it's trading today. It's also being halted a lot. Went all the way down to 250. It broke the low, and it went all the way down 250. What I did was I actually used a screener I showed to you in one of my videos. I looked for regional banks with high PEs, because look at the PEs that these stocks are trading at, right? They're trading around 3 PE. right? 3, 7, 8 different ones. Look at it, Zion. It's trading. Zion is a, that's like a crazy bank. It's in the mid cap. PACW halted again. See this? So you got to really be careful how you're going to trade these things. Usually what happens with these stocks, you could see they trend. This is us. This is you're looking at pre-market in gray and the actual market hours. So the pre-market gives you an indication of where this thing traded and where it could trade. And downward sloping trend line. Look at this simple one, right? I just drew it for you right there on the spot. I didn't see this earlier. I'm just seeing now where they stopped. You could trade these stocks even though they're very volatile. Technical analysis works. Obviously, the fundamental takes over the technical analysis and pushes it. Oh, wow, the Dow Jones going lower. This is beautiful. This is what I wait for. I love shorts. I love shorting market. Once again, I grew up in the NASDAQ bubble. So for me to see stocks plummet 70% a day it's actually nice. All right, let's talk about Apple. Apple's got earnings today. Right, so far we had all the big mega caps report earnings, and obviously in Apple, you're going to take it as a swing trade for after the earnings. I would give myself a little bit of time, so I wouldn't take tomorrow's expiration, but let's just take a look for a second. We are at 165, so let's talk about the 165 calls and puts, okay? Whether you believe Apple is going to, so far we had it's $400 for a call for tomorrow, and then if you take next week's, just pay a little bit more. You're looking at 470, right? So we're looking at a difference. Really? 470 to what? 400. Pay another 20 bucks. Take the $70, whatever it is. Take the puts for next week or the calls for next week. So if a call and put costing you $450 each, more or less $470 each, then you have to believe that in order for you to make money, because you don't know which way this is going to go, you're going to take a strata, let's say it's $900, that's what you're investing. You need this to move $9 in order to make money, okay? So if you believe that Apple's going to move $9 up or down, more or less, that should be able to get you into a profitable, whereby your call or your put will be worth more than what you paid for the other call or put. Now, just because it works on the SPY, it doesn't necessarily mean it's going to work on Apple. It just always changes according to how the market makers are pricing, the fear gauge, and what they believe where the stock is going to go. For instance, my call and put straddle on the SPY for next week, right now the 412 call, I'm down 67% on it, but I'm up on the put 107%. So, it doesn't 100%, match 100% one-to-one. So Apple is going to have earnings, and that's what we're looking at. But let's look at Apple. Okay, so if we're looking on daily graph, Apple is really at support. So we had Facebook went up, Amazon, I don't remember what Amazon did, but I don't believe it went up. So Meta went up. It was, let's see for a second, I completely forgot. I believe most of the mega caps went up from the last week's earnings. Okay, so here we have a trend line, an upward sloping trend line on Apple. The multiple on Apple is somewhere around, if I recall, 28. So how are you going to trade this? Okay, so you really don't know what's going to happen, but we are at support. So the belief is if the bulls are right, it should go up. But what if the bulls are wrong? Even if Apple comes in with good earnings, we might see Apple, going up and then coming back down. So this to me today, if the puts and calls were cheaper, I would buy a straddle, but it's so expensive. You know, we're gonna maybe talk about it again, but I'm going to step away from this one. I do have one, you know, obviously one position, but believe it or not, I believe Apple is going down, but that's just me. But I'm not going to take the straddle because we've been talking about straddle because it's too expensive. You know, for it to move up or down $9, it could happen. Meta went up, you know, a lot more than that, if I recall. So we'll see. And Microsoft went up $10, I think, more or more. You know, let's just look at them. So since we're talking about WAL 1722. So yeah, Microsoft was came out with earnings and you know 275 or went up $20 and then it continued going up. Question is if it's gonna roll over. Look how strong it is up here, right? So Microsoft definitely would have paid off where you would pay like $1,000 for that straddle. Amazon, I don't think paid off. No, Amazon, I don't think we had the earnings yet. I gotta check that out. Yeah, because I was looking, the multiple was just insane, you know, $66, like higher than Tesla's. Google. What happened in Google? Wow, I don't even recall. It happened last week. Well, that's what happens when I don't have a position. When were the earnings? Let me look at it. 1 second. Well, it was April 25th, and it seems like, you know, it didn't move $10 and you wouldn't have made money on that trade, right? Because open 425, the close we see here was 104.61, and 426 you had the open at 105.56. I for some reason I recall something else, but whatever. That's the numbers I'm seeing here. So it depends on whether there is going to be volatility with the earnings release or not. So the Dow Jones making new lows for the days. The SPYs didn't touch the low of the day yet, and the Qs are actually the strongest. Only at, well, strongest. They're falling the least here, it seems, according to the charts. Okay, so let's keep an eye on that, and on WAL and PACW and these crazy stocks, these regionals. There's a lot of fun going on here. Don't forget to subscribe to the channel and enjoy the show. Cheers.